Hello everyone, welcome back to my channel. So this video marks the end of the week number 77 in this road to 100k realized return challenge, and this was a quite volatile week for you to have some sort of idea of what transpired during the week. Uh, this is the chart, the 1 week chart for the Qs, and here you'll see that this was an extremely unstable week. The SPY, the also the ETF that tracks the S&P 500 had a similar performance, very similar actually. But on the other hand, this was yet another stellar week for the small caps. The IWM reached another all-time high during yesterday, Friday, and even though the stock came down a little bit towards the end, it was pretty much another stellar performance by small caps. But the performance, the contrasting performance, was due to several reasons that I will outline next. So basically, this in terms of the earnings, this was dominated by the financials, and banks had quite contrasting fortunes. For example, the JP Morgan and the Citigroup, because they failed the estimations of analysts, and basically because they reported a quarterly drop in profits, both stocks came down. But for example, Morgan Stanley and Goldman Sachs reported earnings that exceeded the forecasts of analysts, and those stocks climbed also throughout this week. Also, even though it's not in the United States, the Taiwan Semiconductor Manufacturing reported a fourth quarter profit that exceeded the analyst expectations, and had a ripple effect of producing this large gap here on Thursday at the end of at the beginning of the session, because basically this stoked all the stocks that are also involved with chips, Nvidia, Broadcom, and also Intel, and other ones. But this sort of jump did not last long, and then subsided towards the end of the day. But in terms of earnings, this was pretty much it. Now, in terms of our economic data, the CPI was our first highlight of the week. It actually came a lot cooler, or not a lot, but quite a bit cooler than expected. Even though the CPI year over year was within the expectations, the core was actually the one that surprised the most, because the core CPI went down the most. It was expected to be at 2.8, but instead came as a 2.6 for the year, and for the month it was only 0.2% when it was expected 0.3. So you can see, even though it mirrored the previous month, this was expected to come out hotter, but it was not the case, and this was a positive development, of course, even though this cemented the position of the Fed that for now they will basically not move in terms of interest rates. In terms of the next day, the PPI, which of course is not only less important than the CPI, but this was also a delayed report because of the recent shutdown, and here it came hotter than in the previous month, the month of October. And even though the core came below what was for the month, came below what happened in the previous month, this might be some expectation that there may be some of this acceleration may be passed on to the consumer later on, but this remains, of course, to be seen. Now, the jobless claims, and this was an important one because it came pretty by a long shot, by a long way below what was expected. And as a result of that, this was basically what happened. The treasury yields rose as it was expected, but this also pushed up the value of the dollar. And as a result of that, the dollar had a very good week. It appreciated relative to the euro, and because of the jobless claims came by quite some margin below what was expected, this also supports the Fed apparent decision, or more expected decision, to keep interest rates unchanged for the January 28 meeting, and that is the reason why there is a near certainty that the Federal Reserve will keep the rates between 3.5 and 3.75%. Also on Friday, Friday was a day that, yeah, as you can see, had a quite a big jump pre-market, but then came down. Basically, on the back of more geopolitical news, which were basically the fact that U.S. President Trump threatened that the countries that will not support his endeavor to take over Greenland, and those countries will be facing additional tariffs, which is basically a way to say that, all right, you do not support my efforts to get Greenland. My citizens, my fellow Americans, will pay more for your products. So basically, it's placing the burden of the the stance that other countries have on its citizens, which is hilarious to say the least. And also there were some additional tariff threats a bit earlier in the week. I don't have the news piece in here, but there was some additional threats of tariffs for any country that continues to do business with Iran. But yeah, that apparently did not make much of a move on the markets. Also on Friday, and this is also an important point to make, on Friday there was also some of that bad performance for the large cap stocks was because, and this is a bit of a nonsense to me, is that U.S. President Trump apparently is a bit more biased towards selecting a Fed chairman which is less dovish, or is less keen on lower interest rates than what the market expect. And so the market is really pushing for lower rates, and so it's willing to express his desire to have a Fed chairman which is less considerate of the current economic reality, which is basically inflation is still above the target, and that calls for some moderation in lower interest rates. But apparently, they markets are not give or the stock market is not giving any importance to that. They just want a person that bring interest rates further down. That's all that matters. And for me, this is really a nonsense. A Fed chairman should be independent, look at the market conditions, not only in terms of inflation, in terms of the job market, because that's a double mandate of the Fed, and according to that, make considerate decisions regardless of what the markets think, and regardless of what the U.S. president thinks. They should be completely independent. But yeah, markets sometimes can be irrational, and but that's the way the world goes. Now, as I predicted at the beginning of the week, and I mentioned that in the previous video, because all the trades that I did would expire on Friday, and all because of that volatility, stocks continue to come up and down, and the value of the puts and the calls likewise. And so as a result of that, we were not able to roll over any positions or buy back. There was simply no opportunities to do so. at least profitably. And so we do not make any more trades. The puts on ARKK, the put on ARKK, the puts on Nvidia, and the calls on the Qs expire without value. These puts died, and the calls and the fact that the calls expire also worthless. That means that we keep our shares of the Qs. There was a possibility to buy back these Q shares, triple Q shares, and roll over the position for the next week. But at this price, the premium offered is quite low. And given the fact that yet another volatile week will be ahead of us, because we will have the first revision of the GDP. We will have the PCE on Thursday, and this is a very important one, because this is the metric that matters more to the Fed, which is the personal consumption expenditures. It's actually what the consumers expend or spend on their own consumption. So this will be the biggest highlight of the week. But even by seeing the premiums for the calls or the Qs expiring on Thursday or even Friday, they were not really acceptable. And so yeah, I decided to hope that this weekend no negative developments will come up, and in pre-market trading on Tuesday, because Monday market is closed, it's Martin Luther King's Day. On Tuesday, in pre-market trading, the stock will go up and the premiums will be somewhat higher, to the extent of the gain because of the gamma and the delta effects will offset the passage of time of 3 full days of the theta. And so this was my decision to do it, but even so, yeah, this was a quite satisfactory week. We managed to collect almost $1,700, which is a quite positive one. Especially the rates of return were quite nice, between 30, 50 and 20%. But I'm expecting that the next week will not be probably, yeah, for sure will not be as good, especially because there is one less day of trading, and also because of the situation that goes on with the Qs. Also because yeah, I will have to make a decision whether we will use this remaining buying power to sell puts on Nvidia, which because now, yeah, the price is, this one is 186, so probably we may be able to sell 180 puts on this, or we may be able to sell for the entire week some puts on the a put on the Qs with around 612 strike, because by using this strike we would lower our cost basis from 630 to 627, and that is also a possibility, a good possibility to keep in mind, because we would appreciate if we could bring our cost basis down, because that means that our biggest position, which is the position on the Qs, will become much more profitable from here on end, until we are able to sell these shares back, because of the calls are exercised. But this is something that I will have to see when the markets open on Tuesday. So yeah, I think this is pretty much it for this week. Feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions, and of course feel free to like the video and subscribe to the channel, and we will reconvene either on Tuesday in the evening or on Wednesday morning to start the week number 78, which will be a shorter week, but it still be another week for us to try to get ourselves closer to the end of this challenge. And I'll see you there.